6 things every trader should know. Over the years, I've been able to generate hundreds of thousands of pounds per year trading, and it's allowed me to quit my job, become financially independent, travel the world, build beautiful homes, and not worry about money ever. But along that road, I've spent many years learning things that, had I known from the outset, I would have been way better off and I would have learned much quicker. So today I'm going to bypass all of that for you and share 6 trading secrets that I wish I knew earlier. These tips could have saved me so much time, so much money, so much stress. So stick around, because if you skip the points, you'll most definitely lose money in trading. All right, secret number 1, and that is, it's not about being right a lot. George Soros was the guy who was famously known for breaking the Bank of England when he earned $1 billion in one day shorting the British pound. Now, he had a 30% strike rate, meaning that he was only right 3 out of 10 times. Now, if you're familiar with the casino and the roulette table, you'll know how a casino has an edge over the roulette table. And it's that tiny edge that a roulette table provides with a casino that allows them to play it over the long term and always become profitable, always win. You have to do the same as the casino. To develop an edge in the market, you must understand basic probability and then how to apply that to deploying money into a bet that's always wagered in your favor over time. If you want me to do a dedicated video on how to develop the most powerful edge as a trader, please pause this video now and type "Trader's Edge" into the comments, and if we get enough, I'll do a video on it. Oh, and on that note, I'm also doing a video on a full masterclass on the most versatile trading platform in the world and how to use it. So if you haven't already subscribed to the channel, subscribe now, hit the notification bell so that you see that. And if you're watching this in the future, then the video will be in the description. All right, secret 2, the power of patience. One of the biggest mistakes that I see is rushing into trades or rushing to take targets. The market rewards patience. You have to wait for the right setups. You have to have the discipline to wait for the highest quality trade setups. And don't let FOMO dictate your trading decisions. You want to let your winners run properly. You want to cut your losses early. And don't be one of these traders that feels the urge to be in a trade because it makes you feel like a trader. Patience pays the bills. No one cares but you if you end up in profit or not. Remember that. So process over outcome. The next one is risk management. I cannot emphasize the importance of risk management enough. Trading is not about winning every trade, but it's about managing the losses effectively. If you can become a risk manager first and then a trader second, you'll understand that making money is merely a byproduct of managing risk. Warren Buffett's rule of investing is number 1, don't lose money. Number 2, see rule number 1. As a trader, you have to have a risk management strategy that stops you from being overexposed on your entire portfolio and your entire net worth. Things like correlation risk and consistent application of risk management rules is absolutely essential for your long-term success as a trader. You're not going to succeed in trading without having risk management rules. Number 4 is a really important one, and that is backtesting. Backtesting has been a key component of my approach into profitable trading, and it should be yours. Before risking real money, you should thoroughly backtest your strategies on historical data, because this is all we have to go on in order to build psychological strength to allow us to let our edge play out in the long term. If we don't have this, and we don't know our numbers, and we don't have a clue what our maximum drawdown might be, or how our strategy performs in certain seasons, and how it performs in certain situations, and what our maximum loss was and what our maximum winning streak was, then you're going to have a really hard time trading that live. So backtesting helps us understand the potential success rate and drawdown of a strategy. It provides you with the confidence and the clarity when you have to actually trade live, and that's all you have to go on. The next point is trading is a business. So if trading is a business, traders should therefore treat it as one, and they should treat it with the same level of seriousness and professionalism. I don't see traders do this too often, but it means having a solid plan, a policy, maintaining records, analysing performance, continuously learning and improving and optimizing. It's not just about making trades, but about managing the entire process efficiently. And the last point on this is there's always a cost of doing business. A lot of traders struggle with this, and the reason being, when they compare it to a regular business, they know the unit cost of their product, they sell that unit cost to someone, and in that unit cost they have some overheads, and whatever's left is the profit. Well, it's the same in trading, except it doesn't come on a unit by unit basis. You might have 3 weeks of losing trades, you might have 5 weeks of winning trades, so it's sporadic. But ultimately there's still overheads and there's still profit, and the trading has to be consistent with your edge playing out over time in order for you to benefit from those profits over time. But the overheads are things like broker fees and commissions, broadband, software or charting packages. Anything that you might pay for through your trading profits is an overhead. So when you think about your trading this way, it can really make you start to think more seriously about how you approach it. The next point is mindset and psychology. I can't stress enough the importance of having the right mindset and psychology for trading. Strategy and technicals make up for probably 10 to 20% of successful trading. I can teach you to trade a strategy in a couple of hours. But if everyone could learn a strategy, why won't everyone make money with it? Well, that's because the rest is all psychology. Emotions like fear and greed, they derail traders all the time. Fear of missing out, fear of leaving money on the table, fear of losing money, they're all going to affect your trading decisions if you don't have your mind right. So you need to have self-discipline, emotional control, and the development of a mindset that can handle the ups and downs of trading without becoming overly reactive to any situation. In the description of this video, there is a link to a free test that you can go and take in order to analyze where you're at with your mindset, and you'll get a full report on action steps that you can take in order to build that mindset to raise the probabilities of you generating profits from the market. Alright, if you want to learn more about this and you think the 6 points that I've just been over are a piece of you, then you can learn more by checking out my extremely popular video here. But also, if you want to spend the next 30 days with me so that you can become very confident in placing your first trade, then I've reopened my 30-day trader challenge, which you can find in the description. So click the link if you want to take part of that, and I'll see you in the classroom. If not, then be sure to subscribe to this channel for more training education, and I'll see you in the next video.